Imagine this. You've only got $100 in your pocket. Most people would blow it on eating out, a new pair of shoes, or maybe just let it sit in their bank account earning pennies in interest. But what if I told you that $100 could be the seed that grows into thousands, even hundreds of thousands, over time? Today, I'm going to show you exactly how to start investing with just $100, even if you've never invested before. And stick around until the end, because I'll share the biggest mistake beginners make that could cost you years of growth. You don't need to be rich to start investing. In fact, the earlier you start, the more powerful your money becomes, thanks to compound interest. Here's the magic. If you invest just $100 every month and earn an average 10% return, which is roughly what the stock market has returned over the long run, in 30 years, you'd have over $200,000. And that's not even maxing out or going crazy with money. That's the power of starting small and being consistent. So, where should you put that first $100? The easiest options for beginners are simple. Fractional shares let you buy part of expensive stocks like Amazon or Tesla with just a few dollars. ETFs, or exchange-traded funds, are baskets of stocks like the S&P 500 ETF, which gives you exposure to the top 500 US companies, and has historically been one of the safest and most profitable ways to grow wealth over decades. And for the extremely risk-averse, there are high-interest savings accounts and bonds which are steady but not as powerful for long-term growth. The best part is that you can spread your $100 across multiple investments. For example, $50 in an ETF, $30 in a company you believe in, and $20 in a high-yield savings account. Instant diversification. Now, how do you actually start? First, pick a brokerage app, Robinhood, Vanguard, Fidelity, or Trading 212, depending on where you live. Then deposit your first $100, choose your investment, and get started. For beginners, something simple and safe like VOO or SPY, both S&P 500 ETFs, is a great option. And here's the key: automate it. Set up an automatic deposit even if it's just $25 a week. Consistency beats trying to time the market. Investing $100 isn't about getting rich overnight. It's about building a habit and changing your mindset. Most people think $100 isn't much, what's the point? But wealthy people know the truth. It's not about the size of your first investment, it's about building the discipline to invest regularly. Over time, those small amounts snowball. That's how millionaires are made. And now, as promised, here's the biggest mistake beginners make. They invest $100, see the market drop, panic, and sell. That's the worst thing you can do. The stock market goes up and down in the short term, but historically, it has always gone up in the long run. Think about every major dip in history: crashes, recessions, even global crises. People who stayed invested almost always came out ahead in the years that followed. That's the power of patience. So don't treat investing like a lottery ticket. Treat it like planting a tree. You water it, you wait, and in time, it grows. A tree doesn't sprout overnight, and neither does wealth. But with consistency, the results are inevitable. Imagine starting with just $100 today, adding even $25 or $50 a month, and letting that money work for you. 10 years from now, you'll thank yourself for the decision you made today. The key is consistency. Even small amounts add up when combined with compound interest. Think of it this way: $100 invested in an S&P 500 index fund decades ago could be worth thousands today. It wasn't because someone timed the market perfectly. It was because they stayed in the game long enough to let the magic of compounding do its work. So here's your challenge. Don't just watch this and forget about it. Information without action is wasted potential. Download an investing app today and start with whatever you can, even if it's just $20. Think of that $20 not as money leaving your pocket, but as a seed you're planting for your future self. The sooner you start, the sooner you let compound interest do the heavy lifting for you, turning small, consistent contributions into something life-changing over time. Stop waiting for the perfect time or the perfect amount. There is no perfect time, there is only now. If you keep waiting for the stars to align, you'll look back 5 or 10 years from now, wishing you had started when you first thought about it. Remember, every dollar you invest today has the potential to grow multiple times in the years ahead, but only if you give it the time it needs. Think of it like fitness. You don't get stronger by thinking about going to the gym. You get stronger by showing up consistently, even on days you don't feel like it. Investing works the same way. The power doesn't come from one giant move, but from the discipline of showing up and adding a little bit at a time. Over months and years, those small amounts begin to stack on each other, creating a snowball that keeps rolling bigger and faster. And here's the truth. The hardest part isn't figuring out the right stock or the perfect strategy. It's simply starting. Once you take that first step, you'll realize how much momentum you can build. Your money will begin to work for you, quietly in the background, while you focus on living your life. That's the beauty of investing. It doesn't require perfection, just participation. So don't let fear, doubt, or procrastination hold you back. Your future self is counting on you. Start small, start today, and let time and consistency do the rest. In a few years, you'll thank yourself for being brave enough to take action when most people only talked about it. If you found this helpful, make sure to hit the like button, subscribe for more financial freedom tips, and share this with someone who keeps saying, "I'll invest when I have more money." Remind them that the best investors aren't the ones who started with the most money, but the ones who started the earliest and stayed the longest. Wealth isn't built by timing the market perfectly. It's built by time in the market. Your future self is counting on the decisions you make today, so make the one that counts. Remember, the best time to start investing was yesterday. The second best time is today. Don't wait another year, another month, or even another week. Start now, no matter how small, and your future self will look back and be grateful you did.